Welcome to Zacks Rank Buy. I am Brian Bolin, and I'm the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth radar screen. And today's stocks are going to get you hungry for more. And Potbelly, the ticker is PBPB. I'm going to have to get a bigger thing so we can see it. All right. PBPB, that's where you'd find Potbelly. It's a Zacks rank number one. That's a strong buy. And it's got an A for growth, which just about all of my aggressive growth videos will have, and a B for value. I'm not totally concerned with the value style score because, growth investors and value investors are inherently looking for different things. So when I see that, I know that I'm on the right track. All right, so let's quickly note here that it is November 3rd, early in the morning on this Friday, and we can see Potbelly is up 13%, $10 at this time. Obviously, earnings have come in, and the street liked them. So, bottomed out here, and boy, oh boy, off to the races. We love to see that. All right, let's go ahead and take a look at all the numbers we love to look at. Are they beating the estimate? Well, they didn't, and then they met, but this is a big beat. It's a turnaround Friday, whatever you want to call it. 4 cents when 2 cents was expected. That takes our average positive for the year. So a couple misses early, meet, and now we've got a beat. So I would call that earnings momentum. So how about our estimates, Brian? What are going on with our estimates? Well, this quarter goes from 2 to 4. We don't have an estimate for the first quarter of next year just yet. For the full year, we're going to go 12 to 15. We like that. And for next year, we go 18 to 25 cents. So estimates directionally looking strong. Let's take a quick look at our sales because that's the key driver here. We got 10% top line growth for this year at just about 500 million. For some reason, we've got a contraction here of 4.5% to 474 million. All right, I know this is going to sound unbelievable here, but let me just go through our last little thing. All right, so 64 times forward estimates is a lot for something that's only producing 2% top line growth. Price to book is enormous at 29 times. See, that's why you got to look at these things. And the market really doesn't like the sales all that much. So just 0.6 times sales. And margins are super thin here, but improving. So, I see 25 basis points from the last 2 quarters. And so anytime we see improvement based, that's good, but they are very thin. We're going to look at the chart here, and I am going to look at my notes. All right, there's 382. So 382 Potbelly stores. Not a lot, but, a decent amount. And it's a sandwich shop. I think in Chicago, they're very popular. They used to be on every corner. Not so popular everywhere else, but they're all over the place for 382. So, all right, we've got our pandemic. The world's going to end, but people want sandwiches, essential workers. Then a little bit of a struggle. This tech time market was indecisive there. Interest rates moving higher. It's a difficult environment. And bang, we're up to $10 on that earnings report. So it's one to keep your eye on. That's Potbelly, PBPB. I'm getting hungry for a sandwich right now. The Wreck. I think I used to get the Wreck when I was there. It's delicious. All right, let's go ahead to another restaurant group. Here, another restaurant stock. It's First Watch Restaurant Group. So FWRG is the ticker. It's only a Zacks rank number 2. That's a buy. But again, an A for growth and a B for value. Not quite having the same type of day here. But we'll have to look at when. Okay, so they've already had their earnings, a beat here as I can see, but nothing spectacular in the way of Potbelly. First Watch is the nautical theme. Your first watch on the morning tower or whatever it is they watch for. So very Florida-centric restaurant chain. There are 402 stores, company-owned, and 103 franchised locations. So that's 505. So it's more stores than your Potbelly. And if we look at our market cap, just below $1 billion here. So it looks like Someone can do that math for me. 500 stores, $1 billion, $20 million a store, something like that. All right, so let's terrible at math off the top of my head like that. All right, so a big miss, and we lost money, but then we turned the ship around and we made money, and that's good. And we beat the number, and we beat the number again with a big number, and then we beat the number again, a little bit a bigger beat, but only in percentage terms, not in absolute. And we'd want that absolute number to move higher. All right, let's take a look at the estimates. What's going on here, Brian? I've got no movement in this quarter. And here I got 36 to 37 to 39. We like to see that. And then 44 to 46. So small ups there. That's why that's a 2 and not a 1. Are we growing? More stores, less dollars per store, right? 20% top line growth, though. Much better growth. Going to go to $1 billion next year. Much better growth here than looking at a revenue contraction. So there's a big difference in your Potbelly and your First Watch. First Watch not open as late either, just that breakfast and early lunch brunch sort of thing. All right, so 42 times sales. It's a lot, but they are growing 17% top line growth in the most recent quarter period. Price to book much more reasonable, 1.8 times here. And, value investors are still going to be interested in that because anything less than 3 times book is going to be good. 1.2 times sales is nice, and your margins are way better. And the growth here in margins, 106 basis points in growth over the last 3 quarters, where the other one was up like 15 basis points. You can rewind the video if you feel like it to check it out. All right, so margins better, and obviously a much younger company. They didn't have to go through the dump and the pandemic. They did, but they were private. Your IPO is up here, and there's excitement, and woof, the bottom falls out, and we're down to low double digits there. But a nice trend line, if you're going to draw trend lines. And with this beat, I like the idea of this thing getting back to its highs and getting over to 21, maybe something like that. One thing that I tend to look at is your gaps in space between earnings estimate lines. And here is a noteworthy gap. That is a big time gap here. When you line this chart up, you're looking at price on one axis and you're looking at EPS on the other. So I'm not going to say that this move is going to be worth a 10% jump from 20 to 22, but it is definitely something to keep your eye on, especially with the stock is trading here below 17. Boy, that chart suggests, $21 price at 17. You got a good percentage there. So First Watch Restaurant Group, I love their avocado toast with crab. It's a seasonal thing. It's expensive as could be for a breakfast, but their $1 billion bacon is wonderful, and they've got great morning glory drinks too. I'm a big fan of First Watch. All right, that's it for me for this week. Be sure to join us next time when we look at 2 more aggressive growth stocks to put on your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.